bank deposits, and everyday spending. Two powerful tools that you may already have in your tool belt that you can use to leverage to get massive cash rewards and benefits from banks. And we're going to explain how in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So today's economy, when you look at it in a broader scale, is not allowing for much in the way of investing without a significant amount of risk. We're talking real estate investing, stock market investing of all variations, crypto investing, and the list goes on. Most investment strategies are really a risky business move of any sort right now. It's a tough financial decision to make if you're not already in motion with these investments. And even if you are, then you may not feel comfortable adding to your positions. So how can we put the cash and our financial power and strength and spending power to work to still bring in cash deposits, cash rewards without having to take much risk? The concept is pretty simple, but I'm going to give you a strategy and a structure to maximize it. You're going to use your deposits and you're going to use your spending to build new relationships with banks incrementally and systematically for new rewards offers, new relationship offers that many banks and institutions hold to put your dollars, existing dollars, to work. How do you go about doing this? What you want to do is, hopefully, if you're not already getting these offers directly targeted towards you in your email or in the actual mail, if you're getting it, then that's an excellent place to start. Basically, what that means is that these banks already know you exist and they're trying to let you know that they're looking for new deposits and looking for new relationships. You're going to take existing deposits. In many cases, you can exercise this strategy with between $15,000 and $20,000 on the ground floor. Sometimes it can be less. Sometimes it has to be more. You're going to have to find the offers that are available to you and see, and institutions you're willing to do this with. But you're going to use existing funds, savings, liquidity that you may have, maybe even your emergency fund, because again, it's going to be deposit safe. Even though we're in a crazy banking environment where banks are, have been collapsing lately. Generally speaking, if it's less than $250,000, it's safe. So you're going to want to use existing funds. Find institutions that are offering these specials. And if you're not getting them in the mail or by email, you may have to actually go on a little bit of a search on the internet or check local banks in your area if you want to try local banks to you, or if you're comfortable with online institutions or banking from a distance, long distance virtual relationships. You're going to have to pick which one you're comfortable with and shop that way. But in many cases, $10,000, $15,000, $20,000 is considered enough money for an institution to offer you an incentive to move those balances over and at least hold them there for a few months at a time. This allows the bank to add to their deposit position long enough to lend money out and make money. And this means that they're willing to share a piece of that pie and entice you to bring it over. So the first part of this is to find institutions that you're interested in developing a relationship with. And usually on a quarterly or semi-annually basis, you're going to establish those relationships, open those checking and savings, get those coupon rewards. Usually it's going to be a few $100s, which is pretty solid for your money just sitting there doing nothing. And at the same time, you want this to be institutions that you plan and are comfortable starting credit card relationships with, because now you're going to pick their best cashback rewards credit card to exercise this strategy. So what you're going to do in this scenario is establish your checking and savings, let that money sit. And in the meantime, you're going to apply for their best cash reward credit card that has that $200, $250 or more $100 bonus that comes at a very easy spend marker, $500, $1,000 in 3 to 6 months, that kind of thing. No crazy spend requirements unless you're prepared for it. And no major hurdles to getting approved for that card unless, again, you're in position for it. I want to let this strategy be attainable for the average person who might not have the 780 plus, 800 plus credit score or $100,000 in the bank. You got $10,000, $15,000, $20,000 in cash, and you have a 680 and higher in your credit score. This strategy should fit for you. So you want to incrementally on a quarterly or semi-annually basis based on whatever the requirements of that reward are, right? So that means if the requirement is that that money sit for 90 days in order for you to reap that coupon, then that's how long you need to let that money sit. Same thing goes for the credit card rewards. How much spend do you need? You want to go for the, low-hanging fruit in a sense of speaking in this situation. But the point is to help you see the math and how it adds up. Let's just stick to $300 for new money in a savings deposit, and let's stick to $250 on a credit card rewards point. If you're able to do this every 3 months, this can easily add up. That's $500 per relationship, and you're able to do this 4 times in a year. That's $2,000 in a year for you to take money that's already sitting in your account and spending that you're doing every day regardless, and bringing in $2,000 extra a year. I don't know about you, but $2,000 for doing what I already do sounds absolutely wonderful. If it's semi-annually, you're still earning $1,000 and starting great banking relationships, by the way, as well. Something that is hard to quantify how beneficial it is. So again, what are the requirements for this strategy to work? I would say a 680 credit score and higher, no derogatories, and at least a reasonable credit history of a few years or longer, 2 to 3 years or longer, and deposits of $10, $15, or $20,000, usually going to be based on whatever that institution is requiring. But as a financial professional working in the banking industry, in most cases, 10, 15, or 20,000 is enough to meet most promotions in most institutions. Go out, do your homework. If you're getting these offers in the mail or email and haven't been sure how to react to them, could be great opportunities for you. If you are not getting these offers directly to you, then you need to go on the internet or you need to go out in person and search for them, because they're out there and it could be a wonderful way for you to recoup in, 5, 10, 15% rewards on your money, accumulatively speaking, without having to take risks like investing in the wildest economy that we've probably ever seen, or at least seen in this lifetime. So I wanted to bring this strategy to you to get crafty, to get creative, so you can still put your money to work to get you the best return. This is JP from Blueprint for Prosperity. As always, I appreciate y'all. I enjoy bringing this value to you. Stay focused. Stay in motion. I'll see y'all soon.